Most people think rich people buy luxury apartments, exotic cars, and beachfront villas, but some of the wealthiest investors in Australia are quietly buying something far less glamorous farmland, and according to one investor I met in rural Australia. This has very little to do with farming itself. It's about what wealthy people believe the future economy will reward. Because, while most people chase assets that look expensive, wealthy investors are increasingly buying assets they believe can survive inflation, economic instability, and resource shortages at first. I thought that sounded exaggerated. Then I started following where the money was actually moving. A few months ago, I traveled deep into rural Australia after hearing rumors that wealthy investors had quietly started buying agricultural land, not luxury property, not skyscrapers land at first. The idea sounded ridiculous. Why would rich people move money away from glamorous assets into farmland? But the deeper I looked, the stranger the pattern became. The investor I met there did not look wealthy at all, no. Designer clothes, no expensive watch, no flashy lifestyle, just faded boots, a dusty truck, and thousands of acres of farmland stretching across dry open land in this video. We'll call him Daniel, and according to Daniel, most people completely misunderstand how modern wealth works. The first thing he told me was simple, but unsettling. Average people buy assets that impress other people. Wealthy people buy assets that survive difficult times. Because the more we talked, the more I realized this story wasn't really about farming. It was about fear of inflation, fear of instability, fear that the global economy ahead may look completely different from the world that created wealth over the last 30 years for decades. The formula looks simple: buy property, invest in markets, use cheap debt, wait for prices to rise, and for a long time it worked. Interest rates stayed low, debt became normal, asset prices exploded, luxury properties surged, stock market soared, and people slowly started believing wealth was simply about buying expensive things before prices climbed even higher. But according to Daniel, something dangerous happened during that period. People stopped separating real wealth from inflated wealth, because when borrowing becomes easy, almost every asset can look successful, even bad investments, especially when everyone believes prices only move upward. Daniel had already seen this before years ago. He invested heavily in luxury city real estate at first. Everything looked perfect. Property prices climbed constantly. Banks approved loans easily. Investors felt unstoppable. Then the market shifted, financing tightened, costs increased, and suddenly, people who looked wealthy became trapped by debt they could no longer manage. Daniel told me something during that conversation that stayed in my head for days. Debt creates the appearance of wealth long before it creates real security. That may be one of the biggest psychological traps in modern finance, because most people no longer buy ownership. They buy payments, mortgage payments, car payments, lifestyle payments, everything. Financed everything, leveraged, enduring economic booms. Leverage feels incredible, amplifies gains, it creates visible success, but leverage also creates fragility, and fragility becomes dangerous when the environment changes. That's what Daniel realized after watching investors collapse financially, despite looking successful from the outside, and strangely, during periods when speculative assets struggled, productive farmland remained surprisingly resilient. Why? Because even during economic stress, people still needed food. That sounds obvious, but financially, it changes everything. Luxury property depends heavily on optimism, but farmland functions differently. It produces something essential: food, wheat, corn, cattle feed. And according to Daniel, wealthy investors increasingly care about essential demand more than visible status, because once investors stop asking, what looks impressive, and start asking, what survives instability, their priorities change forever. A few years later, Daniel slowly started selling some luxury investments and quietly buying agricultural land instead. At first, other investors thought he had lost his mind. One investor even laughed at him. "You sold premium real estate for dirt?" But years later, Many of those same investors were struggling with rising costs and unstable markets meanwhile. His farmland kept producing income quietly, consistently, almost invisibly, and honestly. That invisibility may be the most important part because modern society rewards visible wealth luxury apartments designer, brands expensive vacation social, media lifestyles, but durable wealth often looks boring. Someone who owns productive land may appear less successful than someone driving an expensive sports car, but financially, those two people may live in completely different realities. One owns appearance, the other owns production. Modern culture constantly confuses the two today. People measure wealth visually, followers, lifestyle, aesthetic, success, but Daniel believed the future economy may reward something very different: resilience, scarcity, essential ownership. And honestly, that idea sounded extreme to me at first, until he showed me the numbers. Food prices globally have climbed for decades. Water shortages are increasing. Climate pressure is reducing productive land. Meanwhile, populations continue growing, meaning productive farmland quietly becomes harder to replace over time. Then Daniel brought up something interesting. Large institutional investors and pension funds have quietly increased farmland exposure over the last decade. Some countries have even purchased farmland abroad to secure future food access, because food security is no longer just agricultural, it's geopolitical. Suddenly, this conversation stopped sounding paranoid, started sounding rational. Then Daniel asked me something uncomfortable. What happens if inflation remains high for the next 10 years? Most people underestimate inflation because inflation rarely destroys wealth immediately. It destroys wealth slowly, quietly, year after year. Savings lose purchasing power. Food becomes more expensive. Housing costs rise. Utilities increase. And people slowly realize their income no longer buys the same life it once did. That's why wealthy investors obsess over assets that can survive inflation, not because they want more luxury, because they fear losing purchasing power. Daniel believed average people misunderstand wealthy investors completely. Most people assume rich people constantly chase excitement, but according to him, once people become truly wealthy, their priorities begin changing. They stop asking, "How do I get richer?" and start asking, "How do I stay protected if the world becomes unstable?" That psychological shift changes everything, because speculative investing depends heavily on optimism, but wealth preservation depends heavily on realism, and realism often looks boring. Then came the part of the conversation that genuinely unsettled me. Daniel believed future wealth may become increasingly connected to real-world scarcity: energy, water, food, production, resources, essential infrastructure. And if that happens, productive land may become far more valuable than most people currently expect, not because farmland is exciting, but because scarcity changes pricing. Power in history shows something fascinating about wealth. The biggest fortunes are often built before the public fully understands what is becoming valuable. By the time average people notice, the best opportunities are usually already gone. The smart money moves first, quietly, without attention. That may be why farmland investing receives so little mainstream excitement compared to luxury property, crypto, or stocks, because boring assets rarely go viral, but boring assets often survive. And survival matters more than most people think. As the sun started setting over the Australian farmland, Daniel stood silently looking across endless fields, stretching into the distance. No skyscrapers, no visible luxury, no signs of status, just land, quiet, forgettable, essential. Then he said one final thing before leaving: the wealthy are not preparing for the future they want, they're preparing for the future they believe is coming. And honestly, that may be the most important financial lesson hidden inside this story, because most people build their financial lives assuming stability will continue forever, but wealthy investors often build around a completely different question: what still matters if stability disappears? And maybe that explains why some wealthy Investors are quietly packing money into farmland while everyone else continues chasing visible luxury because by the time average people realize why certain assets matter, the smartest investors are usually already there.